Good morning, trading world. It is 8:20 a.m. March 31st, 2021, the end of the quarter, and this is my pre-market outlook. Today's theme, big move coming. Will we see fireworks today, tomorrow, or both? And getting into today's theme, today just feels like such a blah day. When I say blah day, it's like one of those days you kind of look over waiting for everything that's going to happen the following day. So it's going to be a real humdrum, boring day. Much like yesterday. Looking back, when I started the week, I was really looking for some type of a pullback so that going into Thursday, Friday, with that being the first, we would have a reason, or it would line up to look like a big bounce that would happen coming in on Thursday. That pullback has been very, very minimal. In fact, I pulled most of my short puts off that I had yesterday with very nominal or very minimal profits. So, again, today just feels like such a blah day, which kind of lines up as a range day. Whether it's a lopsided range day or more traditional range day, who knows? But let's get into the possible outcomes for today. Outcome possibility number one. We're looking at a range day type structure with consolidation between the 395 area and 393 area, which is consolidation to get up to energy before we break out higher or lower. And at this point, because we're so close to the first of the month, there's a big chance that we break out higher here at some point today. So that is outcome possibility number one that I have given a 40% probability of happening. All right, here we go with outcome number two, in which I give a 35% probability of happening. We have a resistance area of this 395, and we get a break above 395 for what I call a lopsided range day, where we break above, come back, and lurch a little higher. By breaking above this 395 area, it does open up a path to 400. So that's what we're looking at for outcome number two. And here we have outcome number three. We hold the 395 resistance area and reject, come back down. We have a support at this 393 area, and we break through the 393 area. Once we break through the 393 area, we come back for a retest and lurch a little lower. And there's a target support area of about 390 down here. So, they all seem to be range days, just a lopsided up range day or lopsided down range day. Both with some type of consolidation. But again, today just seems so blah to me. I don't know whether it's because it's the short week or because I have so many indicators are kind of pulling opposite of each other. It's a scramble for me to try to decipher on a day like this. Because we have shorter time periods that are looking to go higher, but they are just below a condition of overbought. And I have high resistance levels on higher time frames that are not in that condition of overbought, which makes it kind of hard to kind of read through this area. If it wasn't for the end of the quarter, it would be a lot easier. But because you know you have the influx of funds coming, there are a lot of things that were pointing to a downward move, especially with all the rotations going on. We were definitely headed down, but there are a number of factors that are pointing us up as well, and that seems to be what has me divided right now because of the stimulus. The stimulus and the rotations, where we're rotating to, how much money is rotating. These things all kind of play a factor in having this day just seem so blah and divided to me. And me, I'm kind of, I pulled off my shorts to kind of wait for the fireworks of Thursday. Because if we don't get some type of huge gap down move, or if things don't go crazy, I will be looking to get long on Thursday, or maybe even into the close today, depending on where we are. But other things to kind of keep notice of: on the TNX, which is the 10-year rate, we're at 17.21. The other thing that I could see happening that could give us this jolt back down today is that if somehow we push the upper edge going into 18 on the TNX, which would give us a rate of 1.8%. If we push up into that area, that would have a very pronounced effect on tech, pulling tech down. And for those of you that don't understand the reason of why the higher rate puts so much pressure on tech, most of the tech sector are growth stocks. And growth stocks tend not to have dividends or earnings as of yet, or solid earnings as of yet. So when the valuations are made on those type of stocks, values are based on future earnings. And as the interest rate and yields go up, their borrowing costs increase, therefore forcing a ceiling on their peak profit outlook. So this is the reason why these higher rates put so much pressure on tech, because majority of tech is based on future outlook, and it's hard to keep these inflated values in the future so high when in the meantime your borrowing cost goes up, which in turn takes some of your profit. Money's very cheap right now, and in the future maybe it won't be so cheap. So those are the things that go into why the rates are so important. But at the same time, higher rates mean better yields for financials. So that's that tug of war. So I'm going to close it out here. Again, know your risk. Wishing you a profitable day. Have a great one.